Hey, what's up, y'all? I'm Blue Badge Crypto, and this is a video teaching you how to trade Market Cipher on TradingView. This is a very repeatable strategy with clear entry and exit parameters. Okay. Before we get started, make sure you're on the Twitter at Blue Badge Crypto. Go follow the page, get involved. We got a great community over there, a bunch of great followers. Go check it out. So we got a Cardano chart pulled up here just to use this as an example. And let's go ahead and get the indicators that we need. So pause the video and look for the EMA indicator, and you're going to need a 20, a 50, a 100, and a 200-day exponential moving average. And then you'll either need your market cipher or the TradingView version, the VMC or Man Chù Cipher B. And I'll just scroll through the settings real quick just so you can make sure you match mine. It's mainly just turning off things that are kind of junking up the indicator, and turning these off will make it a little bit more clear to read so you don't have so much going on this in the cipher. I had these divergences turned on. You can turn them off. You don't need the divergences. Again, if you want any of the stuff, leave it on, but you don't have to have it. I have the RSI on. You don't need it. Turn off divergences. Don't need stochastic. You don't need the average of K and D. So all these items, as I'm scrolling through, you can pause the video and match them to my settings to your liking. I do like to have just make sure the VWAP is turned on. That's a good precursor indicator or leading indicator of momentum. So I just like to have it on. That's just me personally. So we have our EMAs, we have our cipher, we have our 20, our 50, and 100, 200-day moving averages. Pick whatever colors you like. These are the colors that I use. So let's start in with a long entry, and let's go over the parameters that we're going to need to enter on a long entry. So first off, we need the 20 over the 50 over the 100, and the 100 over the 200-day exponential moving average. They have to be sequentially over each other like that. If they're crossing, if they're all spaghetti tangled, that's a no-go. They have to look like this, okay? Price needs to come down into the EMAs, okay? If it comes all the way down here and starts breaking down past the 200-day EMA, then that's a no-go, because that's an indicator that the price is probably going down, and by that point, these EMAs are probably crossing over each other. And if they're crossing, then the entry point is bad. Again, this is either a yes or a no entry, which is why it's very clear and repeatable for, say, a novice trader that can get confused or get overwhelmed with price action and trying to trade the market. This is either all parameters are met or there is no entry. Okay. So again, we have the 20, 50, 100, 200 day all over each other. Price action has come down into the EMAs. We go down and look at our market cipher. Okay. We have the blue wave below the mid line or the zero line of the cipher. Okay. We have a blue wave crossover, and that's going to be indicated by the green dot printing. And then we have green positive cash flow on the indicator as well. All of these parameters have to be there for a long entry, or else it's no good. You can have everything set up like this, the blue waves down here, it crossed over, but if you have red cash flow, it's a bad entry. Okay. So let's look at this entry. We have every single parameter met. We have our green dot printed right here on this candle. Let's zoom in on price action here. So green dot printed right here, which means we're good to enter on the opening of the next candle. Okay, so we went and entered on this candle. Your stop loss goes below the next EMA for a conservative stop loss. Okay, give yourself a little bit of breathing room. Don't put it right on the EMA. Give yourself a little bit of breathing room. If you want to run an aggressive stop loss, you put it below the next EMA. So in this case, it would be the 100-day EMA for an aggressive stop loss. For a conservative stop loss, something like this below the 50-day EMA. Okay. So we would have entered right here. If you wanted to be conservative, we would have put our stop loss here. It wouldn't have got hit and you would have had an excellent entry for a long opportunity to go from $1.98 potentially all the way, if you would have held through all this price action, up to $3.10 there. So that would have been an excellent entry. And that is just one example of an entry. You can even see up here that we just had enough of the parameters met with green cash flow still being there. Again, if this would have crossed red, then that would have been a no-go. Okay? But you could even sold here, entered again, and then, if you would have held through all of this price action, rode it back up again. And if we would have entered here, we would have entered on the next candle opening, which is right here, placed our stop loss below the next EMA, and we would have been good to go. So let's see if we can go find a short entry on the cipher. So this is going to be a pretty good example. All these are pretty good examples. So I'll look at this one and I'll give you the one caveat. If the EMAs just ever so slightly kiss like this, you can see there's still a little bit of space in between right here if we really zoom in. But if they just ever so slightly kiss, then that's okay. But if they're crossing, they look like spaghetti noodles all crossed together, wrapping up, that's a no-go. But if it's like this, then you're still good. So it's the exact opposite of what a long entry is going to be. So we have our 20 below our 50 below our 100, and our 100 below the 200. Price action has gone up into the EMAs. Our blue waves are above the zero or midline. We have the blue wave crossover indicated by the red sell circle, which happened on this candle. And we have red cash flow. Okay, so we got the crossover right here on this candle. We would have been good to enter on the next candle opening. We would have put a stop loss if you were conservative stop lossing right here. Again, an aggressive stop loss would have been the next EMA. And even if we were conservative, we would not have been stopped out again. And you could have had a great short entry all the way down if you really held it to the very tip to 89 cents. And that would have been from $1.66. Okay? But again, the same thing. If every single parameter of a short entry is not met, you cannot enter. If you have the crossover, you have all the EMAs below each other, you have price action going up, but cash flow is flipping green or it's become green, then you can't enter. If the waves like this aren't above the zero line, you cannot enter. And that's what makes this strategy so good, like I said, especially for a novice or beginning trader, because it's a very clear cut picture of if you can or cannot enter a trade. There's no guessing. There's no ifs, ands, or buts about it. You either meet the parameters or you don't meet the parameters. Okay? And again, same thing happened here. You had price action come up into the EMAs. You had blue waves above the zero line. You had a blue wave crossover indicated by the red sell circle. So we would have been good to enter on this candle opening. We would have put our stop loss below or above the next EMA, which would have been the 50 EMA. If you wanted an aggressive position, you could have put it up here. And even if we were conservative, we would not have been stopped out here. We would have gone for a nice little short here from $1.31 down to about $1.20. Okay, so that's the basics of the strategy. Like I said, it's a very repeatable and a very systematic process. Okay, you either get the entries or you get the parameters or you don't. If you have any questions, go ahead and throw them down in the comments. If I didn't answer something or you think I left something out, go ahead and put those down there and I'll do my best to answer your questions. I hope you all enjoyed the video. I hope it's informative. Thank you for watching.